We've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Hirsch, the master of seasonality. I like that, Spencer.
I was hoping for master disaster like Apollo Creed, but
Oops. Sorry.
Where's JC? We're kicking him out.
Yep.
Sorry, my fault.
Strazza said.
So this is the first week of the show, guys.
This is week 2. Thanks for watching. No, I appreciate that.
Oh, last week you started. I was away.
Yeah. We wanted to have our homies in, as the first guests, so if we screwed anything up, it's all good,
All right.
So, and listen, and we wanted to hit it hard from the start. Everyone's talking about sell in May and go away. And if anybody has anything to say about seasonality, for those of you who don't know Jeff Hirsch, where you been? If you don't read the annual Stock Traders Almanac, do you even take your portfolio seriously? What are you doing?
It's kind of perfect, right? We have Jeff on, not only in a seasonal inflection point right at the end of May, but we just got monthlies. We're in June. Jeff, when were we in Orlando together last year?
It was Halloween time, wasn't it? Late October?
It was late October, that's right. And we were talking. We had both turned bullish. You were talking to me how you were long Dow diamonds. I remember specifically, and people thought we were kind of crazy.
Also the Qs and the Russells. Russells, having a rough patch with what's going on in the economy and the market and stuff. But we were long early. First, we were short last year. We were bearish through. We were looking for that. I mean, you guys were talking about history before I showed up here. It's one of those bottoms that just was sort of a rolling bear market, rolling bottom, kind of like 74, which was one of the analogs we were tracking all year last year, amongst a few others. And, everyone kind of Russell bottomed. I know, JC, you were all over that back in June with all the new lows stopping there. And then Dow bottomed September 30th. S&P on October 12 of memory serves, and the NASDAQ and the NDX on December 28th, but all hit an intraday low in that October 13, it was an up day, but there was a big candle there, since you're talking about candles today.
That was the CPI report that the market reacted the opposite way everybody thought it would react on, and you got the blowout Mariposa.
Remember,
right.
I was on the phone with you, Strazza, and I was buying ARK pre-market on my phone. I was at Lowe's. I was doing such dad things, it was a Wednesday morning or something like that, and I was like, we got to be buying this breakout. And I remember laughing about it with Steve.
I was talking about how much I loved the price action, and people were screaming at me on Twitter.
And then also by that point, even though the S&P and the Dow and the NASDAQ hit new lows in October, there were barely any stocks left, still going down. Most stocks had already bottomed. Most of them in June, some even in April and May. Some had already bottomed by then. And then the big.
What do you think about breadth right now, though? I mean, that's one of the things we're looking at. It's a little bit, a little bad, a little crappy, a little stinky.
It's not that breadth. It's not that breadth is crappy. It's that concentrated leadership, in my opinion, doesn't necessarily mean widespread distribution.
No, it's not a bad thing.
We're not seeing any evidence that it is. And it's not like people are like, oh, why aren't we seeing any rotation? Why is it just this leadership? Last year, in the back half of last year, when all these stocks were going up, except these mega cap growth stocks, everyone was bitching that Apple and Tesla and these stocks weren't going up, and everyone was complaining about the market when meanwhile everything else was already working. And then we got that rotation into this year, and what happens? Everybody's bitching that those are the ones that are working. I mean, it's just, I think people just like to complain. I mean, this is what do they say, another brick on the wall of worry or whatever. I think that we need to see rotation, right? So why don't we get into the seasonality, sell in May and go away, but in pre-election years and in years where the market gets off to a good start, June and July don't necessarily have to be bad months. It tends to get worse in August and September. Right, well, you have that right?
Yeah, you do. Oh, there's my chart. That's the NASDAQ. I mean, it's sort of really a testament to the whole fallacy of sell in May and go away. We don't go away. We sell some things. We reposition.
We're not going nowhere, Jeff. Tell them. We here. We're not going anywhere.
Yeah, I mean, I'm looking range bound. I mean, most of the time, the worst months, it's not just this shows the worst 4 months of for the NASDAQ. NASDAQ has a best 8, worst 4, versus Dow and S&P, which are best and worst 6. But it's really sideways action. And, the thing that you look for in seasonality is the market tracking it in the current year, or is there some other forces at play? We see it tracking in the purple line here pretty well, very well. It's been doing so since last year, and also along the 4-year cycle. There's that sweet spot we all keyed on of the 4-year cycle, the 3 quarters from midterm Q4 through pre-election year this year, Q2, which is ending here in June. Not as sweet as it has, historically been for Dow and S&P. Nasdaq's doing quite well, as we just mentioned, with the riding the AI craze or the tech wave there. But market's getting a little tired with the breadth we spoke about. Technicals, we're still having some trouble. Yeah, the NDX is at new highs, but Nasdaq was still struggling with the August highs. And it's just setting up with the geopolitical arena, with the technical arena, market internals, the seasonals. We still battling the Fed, and the GDP is looking okay, but not blowing any way. So
what are you talking about, Jeff? Who are you talking to right now? What you think that I care about your GDP projections? Come on, Jeff. You know who you're talking to. You know why I invited you here, and it's not because I care about your GDPs, right?
You want to talk seasonals?
I want to talk seasonals. Haven't I always told you that seasonals are part of technical analysis, right? Because
they are.
Back in the day, Jeff used to be like, well, you have your fundamentals, your technicals, and your seasonals. I'm like, bullshit. Seasonals are technical analysis, because what is technical analysis? It's the study of the behavior of the market and market participants, the study of the behavior of the market. Seasonality is part of how the market behaves.
I agree and disagree. We put seasonality in a slightly different category than fundamentals and technicals and monetary policy and sentiment.
Bullshit!
But
you're wrong. You're wrong. I will.
It's your show, man. I can be wrong.
All right, stop it, children. Jeff, in your note, so you came into the year bullish. Let's provide some context.
Still bullish.
Yeah,
still bullish.
But talk to me about this April 25th MACD
sell signal
for the Dow and
S&P. That was for the Dow and the S&P. We start looking to get out of the seasonals. A little bit early. The last month of the best 6 months is April, and we start looking for a technical trigger within the seasonal window using MACD. You can see the 12.26.9 down there. That's the sell side MACD. This is showing the Nasdaq, so this isn't really going to show the. I guess you can kind of see the April crossover. That was there.
Signal here though on the Nasdaq.
Say again.
You did not get a sell signal here on the Nasdaq.
Because Nasdaq has the best 8 months, which ends in June. So we start looking today. So if we get a crossover, pardon me, today, it will be a sell. It doesn't look very likely.
And we got a crossover in the Dow or S&P last month? Or in April?
Back in April.
April.
Last month was May. It's now June.
Yeah, it is now June 1st. All right.
So that's what we're looking for. And
so what, Jeff? S&P 500 5,000 this year?
No, not necessarily.
Are we gonna get a ripper into the end of the year and it follows through into next year?
I think so. Maybe towards the end of the year, early next. I think we have.
Is that what you're saying, Jeff? Are you saying that you believe that the S&P 500 is going to hit 5,000 this year? Is that what you're saying?
No. I think didn't you?
It sounded like you were saying that. It sounded like.
Did you run a poll on that? It was 6 to 12 months was the answer I picked. I think.
All right.
I think that was your Twitter poll. So not this year for sure, but potentially. Since you're throwing out big round numbers, let's talk about a big round number called Dow 38,820.
All right.
Have you seen that on a book cover?
Are we going to take a picture of that here? You can have it. We'll give you your flowers. You can have it. Tell the kids that they don't know. Tell the kids what you did.
The big question is what's next after that?
50.
No.
What do you know?
I'm thinking more like stock picking, seasonality trading market where we don't gain a whole lot of ground. Not next year. Once we get up to that 38,000, 40,000 Dow level and equivalent on the other indices, we might go into one of those, more similar markets to the 70s and 80s where there was a lot of action for traders, but not a whole lot of ground gain on the upside. Maybe another sideways.
You want to sell books? Just title it Dow 100,000, right? Make it $1 million. Dow to $1 million. You want to sell books? That's how you sell books.
Hey, you couldn't go the other way and sell the fear, man. Dow 3,000.
You'll probably sell way more books.
Probably. Everyone likes to be afraid.
What do you think? What do you think people are? Sorry, Strazza, am I stealing and asking all the questions again? Am I doing that again?
It's what you do. Go for it.
I was going to ask, like, what you think, from a seasonal standpoint, everybody's focused on selling May and go away, on the presidential cycle, the pre-election year, all of those things. What do you think, specifically from a seasonal standpoint, and it doesn't have to be stocks, it could be anything, that you think people are ignoring? Not being talked about enough that you think is pretty critical right now.
Don't say GDP.
Yeah.
I mean, there's a lot of good, returns in bonds right now. I mean, this is we haven't had the ability to sit quietly in the summer and work on our next projects and be with the kids and play some golf and go away and hit the beach while we park money in bonds and earn some interest. So right now, which is part of our portfolio, our strategy, we've been switching into, and I just gave Pearl, I saw him on your show last week too. I just gave Pearl a couple of tickers that we have in our portfolio. Just, simple SGOV, SHV. It's just, the bond ETFs are sort of 0 to 3 months and the 6 month ones. That's just a place to, cash gives you time to think, man. And I don't see the market doing a whole lot. I think we could probably run a little bit further into June. On that seasonal chart you showed, I was highlighting the mid-July peak of the NASDAQ and the NDX, which sort of finishes with that little, what we call Christmas in July, that mid-year rally from the last few days of June to the 9th trading day of July. So, I mean, those are some, drilled down seasonal things. Also, the Memorial Day week's been negative recently. The week after Memorial Day, June 1st is got some positivity to it, but I think people are ignoring the fact that they could earn a little interest while we evaluate the where the market's gone so far.
Well, Jeff, you're seeing commodities just continuing to struggle. Looking today, oil not even getting a bid today. Copper a little bit. Oil not even getting a bid.
Yeah.
So continuing to point to lower interest rates from the commodities market, and then with the resiliency in growth stocks and technology. Again, also pointing to lower rates. To me, if from a seasonal perspective and an underweight standpoint, you think bonds are a good opportunity here, seems to me like the commodities and the stock market agrees with you.
I would say so. I mean, seasonally, oil is and energy are over. Their seasonal bullish trend is over. It kind of ends in around May. Starts more like December, February. So
that summer driving season bid in oil's bullshit.
No, it happens prior.
Right, because the market's smart.
In advance of it, so it's not bullshit. And we are putting out the Commodity Traders Almanac for 2024. That'll be out in the summer, late summer, early fall.
The more almanacs, the better, is what I always say. And then and everybody who's interested in this, first of all, read the annual almanac. If you don't, what are you even doing? Number one. Number two, the little book of season. What is it? Little book of
stock market cycles. Little book of stock market cycles.
Little book of stock market cycles. It's literally a little book, so you'll fly through it. But you break down so many different parts of seasonality and different things you can look at as an investor. Very quick read, very easy, and will help you use the annual Stock Traders Almanac better.
Thank you.
This is typically the part of the show where I turn around and reach to my bookshelf and show everybody our guest book. But I was actually reading Jeff's yesterday. It's downstairs in the living room. So
you only have one?
What? I was reading the one that got last fall.
I got to give you another one for the office. You got to have one for.
No, it's downstairs. It's just downstairs.
All right. We're actually talking about redoing a little book, updating it. Go ahead, Steve.
You should. I really enjoyed it.
Listen, Jeff, before we let you go here, you got into the market at the right time late last year. Now you're getting out. How are you going to navigate getting back in come November?
Well, we use the seasonals and the tacticals together, and we will be looking for another MACD buy signal in October. In the meantime, we'll be rotating into some of the sectors that do well in the worst months. We might look for some shorts if something shows up on our stock screens, but defensive and cautious. Looking for this. Sideways, expecting some pullbacks over next month. So
technical seasonals. You're killing me, Smalls.
I'm going to keep saying it now.
So come November, you're looking for MACD crossovers to re-enter.
October, we start looking at October. You want to get that October volatility, that October phobia like we had last year. I mean, you can get in a little bit earlier. It depends what the market gives. You get a big sell-off or a correction in August, September. You can start nibbling. But
have you done any work on? And I know we only have like a handful of periods as a sample size, but have you done anything on debt ceiling and price history during these debt ceiling?
I mean, there's an analog chart in the slide deck I showed you of 2011 with I've got some notations on. So it really sets up a lot like 11, which we had Democratic president, Democratic Senate, Republican House. McCarthy was playing this from the same playbook as Boehner did. But as I said, we saw that movie already. It's not going to be as much of a shock. I think we pretty much have a deal. I don't think it's going to have as much trouble getting through the Senate. Yeah, there it is. But the thing that is interesting on this chart, you see in July there, once the Budget Act passed back in 2011, market still sold off. Yeah. That's about 16, 17% there. And there was a high of, so this is the S&P on April 29th, and a sort of, Ned Davis research defined bear down 19.4%, bottom in October of 2011. So I don't expect it to pan out exactly like this, but geez, it's tracking quite closely with the 23 in the blue line there and 2011 in the black line. So another one of those analogs.
Just to be perfectly clear about this, everybody's worried now that there wasn't going to be a deal. I think I saw that there was a deal last night. I really don't quite care about it. But last time this happened over 10 years ago, the market was pretty resilient, pretty fine. Then they struck a deal. Then we got a bear market, basically right after it.
Kind of a sell in a news situation, I think. And also...
Or maybe, or just maybe, bear with me, maybe it didn't matter, right? And the market was more interested in other things. Because what people fail to realize is that people think that the market should care about the things that they think it should care about. But the market usually doesn't care what you think it should care about. And, usually. And by the way, European stocks had already been rolling over for a while before any of that happened in the United States. Now we're seeing the opposite. Europe is making new highs. This is a completely different market environment. Couldn't be more different. I think they're just taking old walls of worry bricks and recycling them. They ran out of things to scare people with. They're like, oh, let's do this debt ceiling thing again. It's ridiculous.
All right, we got to hop. Guys, we got to hop. Jeff Hirsch, editor-in-chief of the Stock Traders Almanac. Jeff, we'll have to have you back on again this summer and see how this plays out.
Thanks, guys. Appreciate it. A lot of fun.
Jeff, come out and play golf with me.
I will.
I can't take no loss. I don't even know what it costs. I hit the ground.